In this video, you'll be learning about this topic.
Hari, I need your help on this. I'm not an expert on Oracle. Everyone knows what Oracle is. They know it's a business-to-business type company. And so that's why I think we're just not intimately familiar like we are with Apple or Amazon or something like that, because behind the scenes, when you look at their revenues, 66% of their revenues comes from cloud services and licensing support. Another 19% comes from cloud licenses and on-premise licenses. Only 8% comes from hardware and 7% comes from services. So, I mean, this is all about their intellectual property for software and on-site labor, it appears. Looking at their numbers from 2019 to 2020, their numbers are slightly down. And I want to start off by saying that I'm bringing this pick up because it is showing up in our value filter, not at the top of our value filter, but it's demonstrating that it is kicking off a decent amount of profit. And the momentum on this is good. When you look at the long term of this thing, clear back to the 2000s, this thing has just really had a very steady climb just year after year. When you look at their margin in a per share kind of way, it's very high, double digits. When I'm doing an intrinsic value assessment and doing it in a conservative way, I'm getting in excess of like 6 or 7% on an annualized basis for the company. So not nearly as good as what Toby had, but decent numbers. I really like the network effect and the fact that they're in this technology space, because that really kind of seems to be where all this printing is manifesting itself, is in anything with a network effect that's tech related. So I'm looking at it from that vantage point, but I'm kind of curious to hear your thoughts out in the valley of what people think of Oracle.
From a valuation perspective, I do agree with you that this is not something that is on the radar of many growth investors, at least. My opinion about Oracle is that, just to give some context, their main strength is their relational database. This is like how IBM had their mainframes. What mainframes was, basically they were system of records for many companies. So it was really, really at the core of many businesses that it's really hard to replace. I have been in many companies, I'm not going to name them, I think you can guess, where we had attempted to replace Oracle. And these were companies with good technical talent. It was a Herculean task, really, really tough, took many, many years. In fact, Amazon has their own databases in AWS. And only last year is when they were able to get out of Oracle. And even then they had a lot of trouble doing so. So it's not easy for people to get rid of Oracle database. So having said that, the challenge I see with Oracle is the same as IBM. They have a cash cow, which is deeply entrenched in some of the existing businesses, but they are not able to innovate like Microsoft and get good at other stuff that is relevant today for most companies and businesses. And that has shown up in the way they have failed to capture the cloud and how they were slow. In fact, I put IBM and Oracle in the same bucket. They both are old, soggy companies, which none of the brand new top talent, or not even top, like if you can't get into any of the companies, you will probably join Oracle or IBM. If you are from Oracle and IBM, I mean, I'm talking today. I mean, 10 years back, 15 years back, 20 years back, really good engineers used to go to Oracle. So I'm not saying people in Oracle now are bad or bad engineers. It is just that today, if you ask a new college grad, Oracle will probably not be in their list at all. So I'm worried about that is number one. Number two, they made a couple of investments which were like buying Sun. Really didn't pan out. And in your numbers, you just said like 7% of their revenue comes from hardware. Basically, that's all Sun. And Sun was already like, their hardware business was not great. Java was not making money. So it was not really apparent why they bought. Sun Microsystem and whether it really panned out for them. So it's like how IBM made some acquisitions that really didn't pan out well for them. So I just put them both in the same bucket. So in the short term, yes, they are a cash cow. In the long term, I would be worried about their ability to execute. And also, we have to keep in mind Larry Ellison, their founder and CEO, he's gradually disengaging because of age and his tenure there. And I believe Mark Hurd was one of the CEOs who passed away. So they have leadership issues as well going forward. So when I look at their ability to attract talent, when I look at their product portfolio, which apart from RDBMS, that is the database, they don't have much to show. And when I look at the competition that's slowly eating away at the fringes, and this is exactly what happened to IBM, basically, because their ERP solutions is not best of the breed. There are a lot of companies like Workday, Salesforce, and other ServiceNow, Amazon, with their AWS offering, and Microsoft, of course. They're all eating away Oracle's lunch on the fringes, but getting to their core. And especially the new companies are not going to Oracle for a database as well, because most of them will build their software on the cloud, and Oracle is nowhere in the cloud.
I like how you're comparing it to IBM. The only thing that I would push back on with that comparison is when you do look at the top line between IBM and Oracle, IBM's top line is withering away. It's getting eroded. When you look at Oracle, it appears that it's been holding steady. I mean, just as an example, in 2011, their top line was 35 billion. Today, it's 39 billion. And when you look at the trend through those last 10 years, it's just been this really slow, gradual like climb up. It's not very volatile when you look at their top line. And it goes to this network effect that I think that we're both agreeing they have. So that would be the only thing that I'd push back on. This is not a sexy pick. This is not an exciting pick. I get the same impression as you that they're just riding this IP that they have, this digital intangible IP. And I just don't see a lot of creativity of like how they're going to take their company to the next level or how they're going to take market share from anybody else. And the valuation isn't great, but it's not terrible. It's a lot better than you'd see in the S&P 500. So I think it's going to do fine, but it's not something that I'm real excited about. I don't own it. I'm just, pitching it to kind of see what your thoughts would be.
In the short term, next 5 years, I wouldn't be worried about Oracle. They're not going to go anywhere. I'm thinking longer term. If I want to own it for the long haul, they will have their moat eroded over a period of time.
I think it's an interesting pick also because we spoke with Evan, the CEO of NetSuite here on the podcast. If this pick, and I think they're up like 30%, right? Organically NetSuite. If this was NetSuite in itself, like you would just see that rocket fuel growth that you see with cloud computing right now. And then you see Oracle and well, it's not, let's call it flat or slightly positive. It's not what you would expect with a cloud computing company. The margins are great, but it's one of those where you're like, it generates a lot of cash. You'd probably much rather hold it than cash. It's just one of those where I'm like, being in that middle range, if you can call Oracle with that, with the huge market cap, if you can call a company with $170 billion like a middle-sized company, it's not. But, if we compare it to like the huge cloud computing companies, those who actually do have market share. So top three, who would that be? That's Amazon, Microsoft, and Google. Can they even compete in that space? And I guess so to send it back to you, Hari, and you talked about a bit about, big tech and eating their lunch. Like this relationship thing that obviously has a lot of stickiness to it and won't go anywhere anytime soon. With all the investments that are going into cloud computing right now, why won't they take on that as the next thing for those big three in tech? Why would that still be with Oracle? I'm not completely sure I understand that.
That's a very good point, Stig. I think one of the difficulties in removing the database from any application or workflows for companies is that they have to refactor or re-implement most of their software to adjust to that. So even, for example, somebody is moving from their on-prem to cloud, they would still prefer to keep their database the same. They don't want to change too many things at the same time. So they might move to, say, AWS, but they will say, I still need Oracle database, or I'll be on AWS, or I'll be on Azure. But I will keep my database as Oracle, because that's how my system has been working for many, many years. I just don't want to change immediately. But over a period of time, they might change for some of their non-critical flows. And that's how it starts. Once a customer gets confidence that some of their non-critical flows can go through non-Oracle stuff, they can replace some of their critical flows as well. So that might be the reason why a lot of companies face challenges in migrating away from Oracle.
When you look at their margin, this has to be one of the fattest margins of a company for this size on the planet. I mean, their margin is 25% after tax. After they pay their tax, they're banging out 25% margins. That's insane.
They're popular for being extortionists because they know they have a captive customer.
Toby, what are your thoughts?
I'm just kind of fascinated listening to Hari's discussion because I guess when I look at these big legacy tech companies, that is the concern. That's always the concern, that the reason that they're cheap. And there's a few of them around at the moment. Cisco, eBay, slightly different to solve consumers rather than businesses. But there are quite a few of these older line tech companies that have got to that mature stage that are ignored completely by the tech investors. That does make me a little bit concerned when I look at something like this. What does this look like over 5 or 10 years as competitors compete for those big fat margins and people who are trying to escape? When you've got that prisoner's dilemma type relationship with your customer where you're gouging them every single time they're looking for an opportunity to get away. I just wonder what that does.
Hari, you had mentioned that AWS had gotten away from them in the last year. When I'm looking at the numbers from 2019 into 2020, it seems like there might have been a little bit of an impact, but not nearly the impact of an Amazon AWS stepping away. So did they only separate themselves a little bit, or do you have more details on that?
I don't have all the details, but what I meant by AWS or Amazon stepping away from that rather than AWS, because AWS doesn't really control what their customers will be using. They give them all choices. So Starbucks on AWS, for example, they can still go ahead and use Oracle. So it wouldn't be a big impact because my understanding is it's just Amazon related. So it must be just one customer.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.